So welcome back, and now we will take about price patterns, and here we will combine a little bit of what we have learned previously and apply it to how to make sense of certain patterns, and you will see how nicely everything fits together. So the first and probably one of the most profitable patterns is the head and shoulders. It is very interesting to study this pattern. If you are new or if you haven't much experience, then this is a very good starting point. If you are experienced, you will probably say, oh, head and shoulders, that's a beginner and it's an amateur pattern, but this is not true. You need to get out of this mindset. There are many studies and books have been written about how profitable head and shoulders can be, because it tells you so much about the market. So let's look at this market here. We were in an uptrend, very strong uptrend. Then we have here our correct impulsive wave to the upside, and then what happens afterwards? Now the price seems to struggle. We only make it so far, and then afterwards we see quite a deep corrective wave. This corrective wave and this corrective wave, both corrective waves to the downside, signal or compare to what has happened previously. We've never seen such a strong so strong selling moves. And then here the next one as well, and at the same time we can see price made a higher high here, then here a lower high, and here again almost a lower high, or it's a lower high just barely, and then here again. The market is clearly rolling over, and this is what we call a head and shoulders pattern. For a head and shoulders pattern, you need on the left hand side you need two higher highs, and then on the right hand side you need a lower high. So this would be then the head, and this is the left shoulder, this is the right shoulder. And then at the bottom, when we connect the lows, this is what we call a neckline. The neckline of the head and shoulders is very important, because once the neckline is broken, it would signal a short entry. And you will find this pattern quite often. It is a natural way how the market moves. It is such a good way to visualize and think about what is the market telling us, where we go from higher highs and higher lows to lower highs with strong selling waves in between. Then we even break here and make lower lows, and then we start here this new downtrend. Very powerful pattern that is worth studying. You can find it across all the time frames, all markets. It's a great way to start with your pattern trading. Here's a little bit of a different pattern, or a little bit of a different head and shoulders. We were here in this clear uptrend, and then the market barely pushes higher. That is our first clue that something in the market is changing. And then here and on the right hand side we can see the market is making now a lower high. So after this little push higher here, the market was not able to make higher highs and made a first lower low. We have our neckline here. The neckline is always drawn where we connect swing lows. You can see that we have a swing low here, and then we break below that. We come back into this level, make a another lower high, and then afterwards you can see the market completely falls off, and the head and shoulders is often at the turning point of such market periods. One very important pattern and very effective one is either called a triangle, some people call it wedges. It does not really matter how you call it, it really matters what it is telling you. So you can see the market was in this downtrend here on the left hand side, and then here we started making a higher low. Also this was the lowest low, then we make a higher low, and then but it was struggling here at those highs. So here is a swing high, and here is another swing high, and here as well. But what do you see at the same time? At the lows are always coming higher and higher. And let me just quickly mark this one. So you can see the price keeps pushing into the same level, the buyers keep pushing into the same level, the highs are coming higher as well. So you can see that at this point then the market, it seems that there are more buyers interested right now. You can see the market is pushing higher and pushing higher. For now the resistance is holding, but it's just a matter of time. And then once you see that the price is breaking above that, it is closing above it, you can see then it starts a new uptrend, and this wedge or triangle is very powerful if you can see such a pattern. Here another one which I traded in my own trading. We have this strong, so we're coming again from this downtrend, then we start here this uptrend, but you can see here price is always, or 1 times 2 times, Here 3 times testing the same resistance at the same time. The lows are always coming higher and higher. So every time the sellers try to push the market down, the buyers step in earlier and earlier to push price into the same level. And then it's just a matter of time. When will the sellers completely withdraw? When will the buyers completely take over? You can see that the market breaks out, even comes back with a nice pullback, and then here we take off to the upside. So a great way of visualizing price. And then here another one which I'm about to trade in my own trading. This is called a double top, or you can call it also, it's a double top with actually another signal which we call an exhaustion push. So you can see here the market was in a very strong uptrend here, and then suddenly the buyers just completely here lost the interest and the market was moving sideways. Many traders will get impatient and look for either premature breakouts here, and then they will caught here with those fake breakouts, or they will get into the mindset, okay, the bulls are here over, the rally is over, now it's time to get short, and then they will just bounce around in this pattern, in this rectangle phase. That's not good. You need to wait until the price is really breaking out. So wait until the price is breaking out and closing outside either the highs, then you can continue the long trade. If it breaks out to the downside, then you can start a short trade. Right now you can see here a few candles back we made this another exhaustion push, and now the price is rallying into the lows. Now the idea is you just wait until the price breaks out of such a range, because then it will signal that the market is making lower lows as well. And yeah, that's a very good way. And I'm just seeing here, looking at the bottom, what do we have here? Another wedge, maybe you've seen it. You can see that the market is always pushing into the same level here from the top. The lows are already coming higher, which means that each time the sellers try to push it down, the buyers come in earlier and push it higher and push it higher and push it higher. So you can even trade that with the pullbacks, use the trend line. Once we have confirmed the trend line, first touch, two touch, here we have it confirmed. Look for the trend line pullback maybe, and then once we break out above that here with this candle, we start this new rally. So you can see patterns are very important. Again, the same rules with the trend lines apply. If you cannot find a good pattern with good confluence, which means that if you are struggling to find ways or levels where the highs are lined up, or you cannot really make sense of such a double top or a triple top, then don't force a pattern. There will always be a next trade. There will always be a next time where you have all the signals lined up, where you can easily make sense of your charts. There will always be a next trade. That's very important to learn early on. Remain calm. Don't force trades, stay patient, and your chance will come. You don't want to lose money on the patterns where you know you should not be in, and then you have to wait and make up for the losses with the good patterns. The ideal scenario is you skip the trades where you are not quite sure, where you cannot really make sense of the chart, and then you skip those. And then once you find a good trade where all the signals line up, then you can really capture the upside and make the profits.